Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
What's going on there? It's May 29th. My friend Curzio, it's the Wall Street Unplugged podcast. Made the headlines and tell you what's really moving these markets. Bring in Daniel Creech, senior analyst at Curzio Research. What's going on, man? How's everything?
Everything is well, Frank. Another wonderful Wednesday.
Wonderful Wednesday. I know. Crazy. No golf, right? No golf really this week. Anything going on in golf? I mean, I know your boy lost last week.
I know. Way to bring that up. That was terrible. But that's okay. Well, that was 2 weeks ago. You're rubbing it about the PGA, aren't you?
Yeah, pretty much.
Yeah. Kepka. Long live LIV. Well, I'll get some hate mail for that one.
I know. You know what? I talked to a friend about LIV, and he was so angry about it. Seriously, he was like, I can't believe these guys sold their souls to the devil. And I'm like, I wouldn't go that far. I mean, these are guys that are doing what's in the best interest of their family, right? I mean, they're going to get paid, just like John Rahm said, they're going to get paid more and work less. Spend more time with your family, right? So it's a decision that he's like, okay, remember golf? You know better than anybody, Danny, when it comes to golf. Nothing's guaranteed. I mean, you see guys that are great a couple of years, and then they fall off the tour. You don't know. You get hurt.
Jordan Spieth.
Well, he's still on the tour, though. But still,
yeah, but I mean, he hasn't done anything.
But I'm talking about like guys like in the mid-tiers and stuff like that or whatever. But it's, you never know what's going to happen. You never really know. But anyway, he got really passionate about it, and he's like, they sold their souls. They have enough money. I'm like, I don't know. They're going to do what's in the best interest of the family. Anyway, it's kind of crazy.
That's kind of like the AI holy grail. Less work, more pay.
Yeah.
Works out. Maybe that's LIV. They ought to take that up in marketing.
Yeah, maybe. Speaking of AI, right? I mean, Elon Musk, right? We're going to talk a lot going on, right? Earnings season is just about over, right? We've seen a couple of companies crawl in with earnings. But like I think it's more than 95% S&P 500, 97% reported. But a lot going on, like we talked about AI with Elon Musk trying to become the king of AI, right?
Yeah, he raised $6 billion, correct? Is that a record? Did I read that right?
It's a record for a Series B funding, right? So, and people who want to doubt him could doubt him, but he's just does great in every single industry decides to attack, whether it's, SpaceX, solar, or EVs, but also consolidation in the crypto sector. What? The crypto wasn't a real sector. Consolidation, right? We're seeing takeover announcements. And then you also have George Lucas finally throwing in the towel on AI, right? Saying that it is the future. And look, we need to adapt right now. And pretty big deal. We're going to get to that in a minute. But I wanted to start with what's going on with the markets, seeing a little bit of a pullback. And the underlying currents of the market, we're not seeing like good breath where a lot of sectors are participating. So we're near all-time highs, and we just off, and everyone would be like, hey, we're doing great. But, it's much more than that, and people are starting to recognize it, where the consolidation that's taking place in the Mag 7 in terms of hedge funds, they're at their most long exposure for these stocks in history. It's at a record. Right, you would think like, oh my God, they're up so much, so we're pulling back a little bit. You're seeing like this become more of a bigger pie of the S&P 500, and even hedge funds and investors are going more into these names. So it looks like the market's doing great, but under the surface, there's a lot of sectors getting hit, a lot of stocks getting hit, and I guess my question to you, which is very, very easy, Daniel, you should answer this no problem, but did NVIDIA's strong earnings mark a top for the markets?
No. Next question.
Okay, let's move on.
No, I'll tell you, because in addition to NVIDIA blowing out the expectations yet once again, we continue to be on this melt up, or at least I don't want to put that argument on you, Frank. But the big thing that I continue to pound the table on and say, if somebody doesn't bring this up when they talk about market conditions, then I just think they are either being lazy or carrying some other water pail for somebody else. Frank, there's a screenshot that I took here. Let me pull it up from mid-May. And I'm not going to get into the details, but it was a Bloomberg U.S. Financial Condition Index. We've talked about this in the past. All you need to know is financial conditions are easiest, or more liquid, however you want to say that. They're easiest since 2021. What does that mean? That means that you have, behind the scenes, easing financial conditions today as you did when rates were zero. Frank, today rates are over 5%. Now, there's
going over 6%, 7%. Did you hear Jamie Dimon really quick about that?
Jamie Dimon.
So he spoke again about it, and he was cool the way he spoke about it. He's like, none of you. He's like, most of you didn't live in an interest rate world that was above 6%, but you believe that can never happen. Why could that never happen? That could actually happen. There's a real possibility of that happening, and just the way he explained it it was just like, hey, it's not as far-fetched as you think. Like interest rates going higher, and that's kind of what we're seeing right now with 10-year going higher, which is hurting the markets. But go ahead. I want to throw that in there.
Yeah, well, we love Jamie Dimon. He's the best bankster. But, So behind the scenes, you have financial easing conditions at the same pace or the same levels, as you want to say, since 2021. The other thing that we continue to pound the table, and I am proud of that, we should take a victory lap on that, is it's going to be very hard, if not damn near impossible, Frank, to have a recession on paper. Yes, paper. Because why? We're running $1.5 trillion to $1.7 trillion deficits. And you're not going to have huge major slowdowns when you have tons and tons of money literally being printed out of thin air and injected in the economy, still on the back end, and you have mass immigration, which is propping up the labor markets and things like that. I know we may get banned on saying the I word. We need a swear jar, Frank. That'd be a lot of fun. Only we could do it a drinking game. We could get buzzed every day and be happy all the time. You would be. I tell you what, you want to talk.
Cool off, seriously,
you want to talk about a financial killer? Yeah.
I get mixed. Probably 75% of people. I don't do it just to. It's like sometimes like the New York comes out because I just get.
Can I interrupt you? Here's your thing. It's like having. This fits you as well. You're a parent, you're a husband, you're a CEO. You can be late for anything. You can have the messiest house or car for anything because you have kids, you have the best excuses. And I think on the customer side, you're a New Yorker. Now, I'm not saying anything negative against New Yorkers. It's just common folk that New Yorkers cuss a lot. Yeah. And I will give you one more credit, not just because you're my boss. You don't do it in a derogatory way. That's why my late grandfather is so great. I just think about him all the time. He could cuss and make you smile. I mean, he would say the worst of worst things, and he'd just be like, he could do it in a negative way, but he would just be happy and fun and like talking about something and just rattle off the F-bombs like crazy. So anyway, it's not nobody thinks lowly of you that listen to the podcast, Frank, but
what you see is what you get.
It is good how you do that.
And it's funny because when we have new policy when we bring on new subscribers to our high end of products that are usually $1,000 or more. We talk to them, right? I do a 10-minute phone call with them. Again, we can't give investment advice or anything like that. But they, I get feedback on it saying, it's I like that you curse and don't really say that I don't like it. Maybe one or two people, but the one thing they say is, which I think is pretty cool, is that you sound exactly the way you do. Like when I meet people in person at conferences, I mean this is me, right? So I'll cool it off a little bit sometimes, but sometimes just the emotions get the best of me. But said
I'll take the other side of that trade. You are, like I said, you can't change. That's okay.
I'll see if I can do it. Go ahead. I mean, you look at the markets, right? We're talking about the markets.
My big thing is you have crazy deficits. You have financial conditions easing on the back end. The latest Fed meeting when Powell said they were going to continue buying bonds with the excess reserves. I mean, that's literally quantitative easing during an election year. And they're just not saying it out loud, which is fine. But that's okay. So that's why, again, it makes me nervous. I'm not a perma bull.
Yeah.
But, man, it's hard not to be bullish when you have Mag 7, basically 30% of the S&P 500, putting up great numbers. And what are you going to do between now and the next Fed meeting or now between the next data? All right, markets are going to sell off, and then what? Well, we might as well start buying again.
I know that's the way the market is right now. But I have to tell you, when I see the front page of CNBC, two stories next to each other. One of them said Bank of America technical research analyst, his name is Steven Suttmeyer. As of May 23rd, that marked the 100th trading day of 2024, and the S&P 500 rallied more than 10% for the year, right? And that was as of May 23rd. So said, when this happens in an election year, 93% of the time, the S&P 500 rises the rest of the year. And then the same page, right next to it, it says market crash indicator called Hindenburg Omen. I never heard of this before either. It says it was just triggered, right? So this is basically sentiment indicators measuring breadth of the market, highs against lows, and it would suggest the market's about to crash. The record's a little sketchy, right? It predicted the last two crashes, but every single perma bear in the world always tells you how they predicted every crash. They didn't tell you that it only crashed 3 times in the last 25 years, right? They didn't tell you, okay, I'm 3 for 25, right? They don't tell you that, but like, I predicted every single crash, right? It's just the promotion is funny, but you see this back and forth where, it's kind of confusing for individual investors. Okay, because you can cite the positives, and we hear people saying the consumer's doing great, and other people saying the consumer's not doing great. I would argue that the average consumer is not doing great right now because high interest rates are really starting to impact them. Then we look at the markets and say, okay, well, we have the inverted yield curve, which always precedes recession all the time. This is the longest it's gone on where we haven't seen that. So there's so many indicators. But what I can tell you about the markets, when you have this mix, like we call it Goldilocks, right? Not too hot, not too cold, or people just, when you have opinions on both sides, it's usually good for stocks. It's when everyone leans to one side, which is why I bought puts in Tesla, right? I mean, everyone was leaning one side. It's terrible. The stock's already down 40%. And then you can go to outside of NVIDIA in terms of expectations and beating them and then, going through the roof, it's, a lot of times you'll see a company report decent earnings and then pull back because expectations are so high and the stock ran up into that. But when you have this, oh my God, I think it's going to crash, and you're highlighting all the deficits and debt and what's going on with the consumers, and then, you're looking at some of the positives, which, again, unemployment's really good right now. You're seeing it being led by technology. But overall, when I look at this market, the breadth is really terrible. That's something that's different and worrisome. So meaning that it's concentrated, right? It's basically the Mag 7 stocks again. And what happened during this massive rally that we've seen for most of the year, we saw it go to different areas. But now we're seeing those areas pull back a lot. And same with the Russell 2000, which I highlighted last week. I mean, the concentration, the average Russell 2000 stock is what? It comes in between 2 and 10 billion, I think. It's supposed to be like 2 and 5. It's around 2 and 10 billion. It's not an exact number because it depends how big the market caps are for, what is it, like the 3,000 stocks, right?
Super micro and all that.
So then after 1,000, the next 2,000 market caps, that's why it's not fixed, but it's usually around, lowest points like at 2 billion. And what was it? Super micro, they only rebalance once. And if you're looking at the top of that index, it's like a $50-60 billion market cap. And the top 5 have market caps on average of 25 billion, 30 billion. That's the top 7 stocks. So is a Russell really doing good? Is it doing bad? The Russell is not an indication of a small caps are doing good or bad because it's so heavily concentrated. That's going to change next month when they rebalance, and they're going to pull those stocks out and rebalance it, and those bigger names are going to go to the S&P 500. But my point is, when you look at the Mag 7, which is Apple, Amazon, Google, Meta, Microsoft, NVIDIA, and Tesla, are hot right now. And you could say, okay, Frank, there's some pockets that are hot. Okay, gold, Bitcoin, oil now, a lot of consolidation. We're going to cover that tomorrow a lot more in detail and give you stocks and ideas like we always do in our premium podcast, Daniel and I. But when you look under the hood, American Airlines just warned, okay, taking down the sector. Healthcare has been a disaster.
Yeah.
I mean, for someone who follows healthcare a lot from my business and how much we pay and how they keep reducing the amount of what you get, and also how, I have Walgreens across the street. Everybody goes to Walgreens or CVS or maybe Publix or whatever, your pharmacy, to fill your prescriptions. And now Walgreens not covering UN Healthcare. Like UNH is not part of Walgreens, which is, I mean, you're talking about the largest healthcare provider, which is one of the main outlets of distribution when it comes to prescriptions. And you're just seeing a lot of changes in the space where everybody's complaining, but somebody has to be making, I'm putting money in the swear jar, fucking money in this sector, because they're annihilating people, right? I mean, we're getting annihilated with these with costs. It's a fortune. So, now I'm paying healthcare insurance, just example of it, same healthcare. I mean, I had 2 hip replacements. One 5 years ago, I paid nothing for, and I had to pay, I think, $6-7 for the other out of pocket with insurance. What's going on? But yeah, healthcare hasn't been good. McDonald's, Starbucks, not good, right? Walmart, Target warning about how the consumer's trading down. They would know better than anyone. Finding a few pockets in consumer discretionary working at Abercrombie. Dick's reported today, good comeback, right? They got beat up and had a lot of problems. Good comeback. Chipotle is good, but Shopify was a disaster. But most of those, consumer discretionary stocks, you're seeing them, not perform in a market where the consumer is supposed to be healthy and good. Media stocks. I mean, you want to talk about you want to talk about being unprepared. I mean, this is an industry that saw this coming miles and miles and miles and miles and miles away. They said, okay, traditional media outlets, okay, we're going to streaming, and they just thought they could start the streaming and it was going to be easy. And now they know that this is a disaster because people want to get all these channels and they want to pay the least amount of possible. And now when you have streaming, you're streaming to 4 different companies, 5 different, you're paying just as much as the old cable bill was.
Yeah.
But outside of Netflix, nobody can make this work, but these are serious headwinds that aren't going away. Right, so home builders starting to pull back now as well, and a lot of this is in relation to the 10-year, which is interest rates. Right, higher yields are not good for stocks. Makes sense, right? The higher the yields, the higher the debt payments, higher credit card, the higher delinquency rates go up. Now, why is the market this time around since 2021, like you said, rates have gone up tremendously? Is because $12 trillion has been injected into this market, and they're not stopping. I mean, for you to say that, Daniel, what was it? What was the indicator? The
Bloomberg Financial Conditions Index.
Financial Conditions Index, right? That's supposed to be tight. We're supposed to be tightening conditions, right? Yep. We're starting to pull back because inflation is still very high, much higher than their target. So what they're trying to do is basically force a recession, try to slow down the economy, and we haven't seen that slow down. You don't see the S&P 500 trade at higher PEs in high interest rate environments. That PE is supposed to go down, and it's gone up. It was 18 times. 18 to 19 times over the last 10 years is the average. Right now, it's 21. It's trading 21 times forward earnings, right? And interest rates are much higher than they were the past 10 years on average, right? Outside of the past couple. So, you know,
And couple that with volatility is very low or really dead. I mean, there's no
so
fear
think about
there. It's wild.
traditional thing like the VIX. Does anybody? I mean, the VIX, right? Does anybody pay attention to the VIX anymore? I mean, what, lowest levels? Again, the inverted yield curve. So where the market's heading? I mean, we hear so much shit like sell them and go away. And I mean, I don't know who came up with that, but let's look at the stats behind it because I'm going to pull up a chart really quick here, Daniel. Just a picture of it. And when you look at this chart, and it says sell them and go away. Look at this chart. So basically, it's S&P 500 that I'm putting up. You can see this on our YouTube channel, which is for free. Curzio Research, Wall Street Unplugged. So it's the average monthly performance over the past 10 years, right? So it's broken down by month. And the market goes up every single month, pretty much except for September and December, a tiny bit it goes down. Every other month is positive, right? On average, I would say we're probably, I don't know about 10 years, but it goes up around 8% on average with dividends, right? Annually since the 1950s. But they say sell in May and go away. So, all right, say if I'm selling in May, sometime in May 31st, start June. June, the market's up. July is the best performing month out of any month. It's higher than November, and it's over 3%. And then August is also a positive month. And then if you look at September, September is the worst month, right? But even if you take, say, June, July, August, September, your net returns over that 4-month period is almost 3%. All right, so it's almost a great performing period, even though you're taking the worst month and the best month was July and the worst month and accounting for September. So when they say sell and may go away, it makes 0 sense. It really does, because you have to account. You can't just say, okay, because this happens this time. Like it's an election year, stocks always go up. It depends. It depends on the situation sometimes. We know that our government, like look at what Biden's doing, and he's doing what every president does, right? What is he doing? Releasing more of the Street Oil Reserve for gasoline prices and bragging about it. No, that's not what that's used for, by the way. Someone needs to tell him that. You should be bragging about that. You just make the consumers feel happy because it's the economy which usually wins the elections. We get it. Every president does it. But there's connotations or the way that, hey, because this always happens, it's supposed to happen, those days are over. You know, people always say, well, history often rhymes, repeats itself, often rhymes, whatever. This is a different period. This is uncharted territory. Okay, we've never been in a period like this where our government would not allow us to go into recession. They're going to spend money unconditionally. They don't care because it's not their money. I mean, they're spending how much to fund Ukraine, and yet you see the homeless rate here, what's going on, right? And so many problems that we have here. I mean, there's still people that don't have jobs, people that don't have homes, right? There's so much that you could do. It doesn't matter. It's not about that, right? It's all about getting elected. So when you're seeing it, once we got into the trillions in terms of the money pushing into this market, it's pretty insane. But eventually that money is going to come out of the market, and you're seeing it, right? So has NVIDIA marked the top? I don't know, but I do know that the markets are very difficult right now. You're seeing them at all-time highs, and you might be like, wow, my portfolio is okay. It's not that good. You're going to have to adjust your portfolio every year. You can own the S&P 500, and that's fine. You know, that's done well almost forever. But we're in a period where you're going to see these massive swings in sectors like oil's red hot right now, Bitcoin, gold, right? Gold, oh my God, gold's on fire, and silver's on fire, right? I don't understand. Please, somebody explain to me why the gold and silver ratio means anything to investors. I mean, why not gold to Bitcoin? So explain to me, is gold higher? So the gold silver ratio, you know, traditionally that means silver should go higher. Well, no, maybe gold needs to go lower. Why are those two relevant? There's two totally different markets. Yes, okay, one follows the other, but you're comparing two different asset classes. I have no idea why people like say, oh, based on the gold silver ratio, silver needs to go higher. No, maybe you're wrong. Maybe gold needs to go lower. You know, I don't know why people use that. It's just two different markets. People buy them for two different reasons.
Well, they make for good charts.
Yeah, they make for good charts. And again, sentiment indicators, maybe, I don't know, but it hasn't worked for a long time. But, you know, my point is there's certain things that are working, but you have to look at this market because based on what we're seeing, this is interest rate driven. When we're seeing the 10-year go higher, guys, that's when you have to be careful. Okay, and the 10 years going higher and it's pushing a lot of things lower. And higher interest rates are going to really continue. They make things worse for the customer over time. And every month that goes by with higher interest rates makes it worse. And we're starting to see that even in the housing market. Finally, home builders are getting it. Eventually, this stuff's going to come to roost because we're seeing delinquency rates really start to rise. How could people who most people have credit card debt, right? 67% of the U.S. lives paycheck to paycheck, households. And yet that means you're taking on credit card debt, which means you're paying 20% plus average interest, you know, which is insane. Your auto loans, getting new auto loans, insane with the rates that you're paying for this. Not as easy to grow the business, not that as easy to raise capital, unless you're Elon Musk. But
Yeah.
It's tough to say where you want to follow companies that have great management teams. Dick's, great job. Did crappy, adjusted, right? Cut costs, focus on the things that are working, right? Walmart, adjusted. Target, I think, is going to be great. There's certain companies that you want to look at and see where, hey, here's the earnings path, and I see it going forward, doing a great job. And that's why you probably see hedge funds with their most long exposure to the Mag 7 stocks, because these are the safety nets now. These are the growth stocks, but look at their balance sheets. They're making money at higher interest rates from their balance sheets. They could do anything. If companies come low, they could use their balance sheet to acquire some of their competitors, right? That aren't, operating that well in this environment, which is not easy because these guys are all laying off employees. They're all using AI. They're spending. That's where a load of their capex is going to. They're cutting back in everything in almost every subsector outside of AI. So I could see why people have hedge funds and even individual investors have leverage to this, and even we do in our portfolios, right? We have two of these big names in our portfolio. But you want to protect yourself. You have to have a couple of these names in your portfolio, but be careful because it is a crazy market, and not everything is doing well, even though the market's doing well.
Yeah. Speaking of what's working, are you going to talk about Elon Musk and saying how AI or jobs will be a hobby in the future? I know you want to talk about his big capital raise, which I just saw the number. I didn't know it was a record But first question, is it difficult to believe that Elon Musk could bring in Saudi Arabia, King, and all these big players into a capital raise?
I mean, so it was
talk
a
about going to your Rolodex
raise
of friends. Holy
for
hell!
Series B, right? Series B is very early funding. For example, it was for his company XAI, and it's going to compete against who? Against all the big guys, right? So he just raised $6 billion. That's a record for a Series B round, and there's a lot under the hood. It's not just $6 billion. I feel like they mentioned the story a little bit, but when you look under the hood, this company's being valued at $24 billion. It was started less than a year ago.
Oof.
Right?
Bubble?
No, I don't think it's a bubble because there's so much room right now. Like, look at OpenAI. I mean, this is an industry that we cover a lot, guys. So, we know a lot of information here, and hopefully we're able to help you. OpenAI, the top level of management, they've been bleeding these guys. They've been leaving. They've been going to other companies. It's supposed to be the best, right? It's ChatGPT, right? So if you look at Claude, it's Anthropic. Amazon's got investment there, Google. DeepMind and Gemini's Google. You have Llama, which is Meta. These are their, platforms, right? They're AI platforms, and he's competing with these guys. And one of the things he's doing is offering much higher pay packages to new employees, right? So he's looking to poach or whatever. But when I see the top name in this sector that's made strides, the fastest growing technology product in history out of anything, of how fast it's grown, how many subscribers it has in such a short period of time, and now you're seeing the top people, the top brass leave. Like crazy. And they tried to fire, Altman as well. And he came back. But just you see this, what's going on in this sector where they're still jockeying to see who is going to be the leader. And when it comes to Musk, how do you doubt this guy? And just to show you the quality of people that came into this investment, Aaron Horowitz, best of the best venture, Sequoia Capital, again, amazing, Fidelity, Prince Ali Vitalo, Valor Equity, Vi Capital. These are all big players, very smart people. And when it comes to track record and experience, you're not going to find a better list of early stage investors with this. Now, for Elon to raise that much money on a company like this, again, record funding for Series B, the Series A, B, C, D, those are private rounds of funding, right? And there's a whole game to be played where if you come in a B, you get discounts to the C and the D. A lot of these guys will invest even more. But for Series B, it's very early, right? Obviously, A is the beginning, but Series B, $6 billion, usually you see maybe 10, 20, 40 million raised. That means, hey, this idea is growing. Let's put more money into it. But this is how much it's almost like they raised an unlimited amount of capital here. And they had to stop people from investing in it. That's how much people believe in them. But his new XAI system, right? This cash is going to be used to bring new products to the market, right? To compete. And it also includes building its own AI supercomputer, which we heard from Microsoft. That supercomputer is going to require 100,000 of NVIDIA's H100 chips. Okay, 100,000 of them, which what do they sell for? $25,000, $30,000, whatever. Remember, they're selling currently the 200 chips, which everyone's trying to compete with the 100 chips, and then they're coming out with their brand new chip, Blackboard, which is coming out in 2025, early 2025. And we covered that, right, of the difference of how amazing that chip actually is compared to, much, much faster, better, more energy efficient. So it's pretty crazy considering Musk says, what did you say before about him saying that, all jobs?
Well, you just said if you want to do a job as kind of like a hobby, you can, but otherwise AI and robots will provide any goods or services you want. This was in an interview, or I saw the clip on CNBC either last week or this weekend. It just caught my eye. I mean, that cracks me up.
Yeah, I mean, it's anything that could be automated, right? And who said this? Was it Peter Thiel, I think? I think it was Peter Thiel. And Peter Thiel said that there's always an unfair advantage when it came to tech, because if you knew how to write code, right, and you knew technology and write algorithms, it puts you in a different class where, you're in control. You're a specialized employee. You're making a fortune, right? Now he says you're leveling the playing field because this is what NVIDIA is doing, saying, hey, no, you don't need to write code, okay? This is all you need to do is tell this thing what to do, and we'll do it for you. And we'll tailor it exactly to your business, and you own it. And we'll help you out along the way. You're just paying for our hardware. You're going to pay for our software as well, and pay price for our software and whatever it is. But, to me, when I see this and where AI is going, it's incredible because people are like, oh, it's a fad, or has it play? Is it done? Is this trend done? Is it topped out here, right? Is it a bubble? Are you kidding me? I mean, look at the names, the investments, the monies. Look at NVIDIA's quarter. But Musk believes AGI, if you're not familiar with AGI, that's the day AI surpasses human intelligence. Okay? In 2019, the smartest people in the world projected that would take 80 years. That's when the first version of ChatGPT was released. Musk, now today, is saying it's going to happen next year. That's how fast we are moving. If that happens, it makes sense for him to raise this much money, but it's automation, computers learning from computers. Imagine, now you have smaller players that can compete with big guys. You have computers doing surgeries for you and robots. And I mean, it's a whole different world where we're not prepared for it. It's a world that it's hard to imagine right now, just like when I brought up like railroads in one of our presentations that we did, live presentations, where, oh my God, you have all these railroads. You never thought like when that first happened, right? And this is 1800s and into 1900, and you have all these railroads now starting to be built across the United States of what would happen to major cities, of the separation, like this industrial revolution, right? Nobody could really foresee how big these cities were going to be and how many people would move here and how great it was. It was just too hard. That's where we are with AI, the capacity, because it is inevitable and it really is amazing. But $6 billion being raised, a record. I mean, we're still in the infancy in this sector. We really are.
One thing I wanted to ask you is, and this is more up your alley, but there's an interesting article on how AI is making Mark Zuckerberg, CEO of Meta, popular again in Silicon Valley. Mm-hmm. This is from DNYUZ, Frank. Now, I thought this is what you get for assuming. There's a Mr. Emmanuel here, and how do you like this description, Frank? Part-time hacker, full-time AI enthusiast. You ever been called something like that?
No, never. No.
I'm not smart enough for that. He says he's tinkered with closed AI models, including open AIs. I was under the assumption that open AI was a open model, but it sounds like it's more closed. Is that accurate? Because this guy's point is to say, hey, Musk and their new LLAMA2 is fully open. And I guess in Silicon Valley, especially this Mr. Emmanuel is saying he is getting a lot of street credit back because that's a big deal. You can take it, you can copy it, you can mold it to yourself.
Not Musk, but Llama is Meta and Zuckerberg, right?
Zuckerberg, I'm sorry, yes.
Open's a big deal. I mean, that's
a game changer.
It's a game changer because it's hard for a company to do open because you're sharing your technology. I always admire that when Elon Musk was saying, hey, if you want chargers or if you want to learn our technology, it's there. You could use our technology, right? Where Apple never, ever did that in its life, right? Apple controls everything. And it makes sense. You want to control them. This way they have to come to you, right? And then you get them in your ecosystem, and then, now your services, clouds, everything, right? Now you're locked in. An open system is why he needs to believe in an open system. It has to be open because that's his dream. He changed the company of his name to Meta, which is metaverse. And we all think that's a bad word now, right? Metaverse. What metaverse is open. That's what the internet was supposed to be, where it's not supposed to be controlled by 4 or 5 companies, which it is right now. That's what it's controlled. It's controlled 4 or 5 companies. And if you don't think it's controlled and they control you, you pretty much saw during COVID of what happened to anyone who said anything that wasn't part of the agenda. All right. They took drugs off the market, right? And you got suppressed, right? They took you offline. They suspended your account, right? And you're like, wait a minute, how could they do that? Well, because they own you, right? Now, if they don't own you, what does that mean? It allows everyone to build on this software and brings everyone together. Okay, now the former CEO of Gold Corp once did this. All right, this is pretty cool. He changed the dynamic of the gold industry. Gotta forget his name. He's a legend, billionaire, and I interviewed him a couple of times. Great guy, short guy, great, older, one of the legends of mining. Former CEO of Gold Corp. And they had...
Not Ross. Is it Ross?
No, not Ross Beatty. Ross Beatty is yeah, pretty much, yeah, in line with him is two kings there. But...
Two kings.
So what he did is they had a mine and he wanted to figure out like the best way to develop it. And he had all of his geologists and everything. And they really come out with the best way. So what he did is he shared all the plans and said, here, I'm going to let everyone take a look at this. And they're like, yeah, but they're going to know our secrets. They're going to know everything. He's like, it doesn't matter. You know, someone might have a better idea than us. We own the mine, but you know, they might see a little bit more about technology. And what happens is they had thousands of geologists, right? Told me a story that all emailed in. And one or two of them had fantastic ideas, which got that site, and it's their largest mine, developed, and which changed the history of that company, right? And he was willing to, because in geology, geologists and all mining, it's very like, hey, you know, keep the secrets.
Right.
These are all secrets. Even drilling, when it comes to oil industry, okay, this is how we drilled. It's all secrets, right?
And that makes sense. If you have it's a competition,
right?
You have the efficiency, you want to hold it.
And he realized, like, I don't have the best ideas, and nobody does. You might be really smart in your field, I'm smart in your field, but outside of that field, if you bring everyone together in this community, that's what the metaverse is, where now instead of going into, say, Fortnite, Roblox, Minecraft, everything you buy goes to those specific companies. Now, instead of doing that, imagine you can create your own stuff, create your own skins, create your own guns in a game or whatever. Now you could sell them and you're making money. That's what the metaverse is. It's this open world that you can go into, create whatever you want, sell whatever you want, build businesses, and you own the rights. And you own the rights through NFTs, which are on the blockchain. The blockchain is like a patent. Once you're on there, it's registered and that's it. It's a ledger that can never be changed, right? It can't be hacked. So you own that. So you don't have to go to patent office. You can say, no, this is mine. I own it, right? Through an NFT. And you own that. That's where that's, for me, my imagination, that's where it takes me, where now you have this whole entire world where we have virtual real estate in a company called TCG. And I would like to go out there and say, hey, I'm going to give 5% ownership of everything that we build there. You could build whatever you want to. I'm not a developer. So the best developers, I'm going to give you 5% equity stake. Okay, and I'll give you 10% of sales. Build whatever you want, and I want to unleash that talent, the innovation behind these people. And now they can build their own thing. I'm benefiting. I'm not doing anything. They're building it. I'm giving it away for free. But that's where it comes to the metaverse. So it's a good question. You know, Llama and being open, they have to be open. I mean, this is what his vision is. Okay, whether you agree with it or not, maybe it's too early with the metaverse. He changed the company's name from Facebook to Meta. Right, this is his vision. That platform has to be open, and kudos to him, because that's why he's deserving credit. Because, you know, he's not talking out his ass and saying, "Oh, we're going to do this," and not do it. Right, so which is really cool. But
and it allows everybody to make their own chatbots, their own systems. You know, just real quick, Daniel Creech. What do I think? I think this is great for. I mean, competition is always great. That's why capitalism is the leading and best platform that we have now. Because we're going to benefit guys like me that don't have any idea on this, like you said, with Peter Thiel's comments and everything. This levels the playing field to where you can download one of these, and I'm going to mess around with some of this. Download this, try to create your own thing out of it to help you get more efficient or to learn more or whatever. My point is that all this competition with the smartest, biggest, most powerful, richest people, I think is a good thing for consumers in general, and that's the takeaway for everybody from here forward, in my opinion. So don't, if you feel overwhelmed or drinking out of a fire hose like I do, Frank is a great AI guy. He's always talking to me about stuff like this, and I'm kind of like, yeah, I just want to go back to oil and gas and talk about that. Yeah, but the point is that this is exciting stuff, and it's going to benefit everybody, no matter what your field is. And the last thing I'll say is that for you guys, wonderful with trades out there and electricity and heating and air and all that, AI robots are not taking your job anytime soon. So keep us cool and warm and all that kind of stuff, especially now that global warming is just out of control.
Out of control. It's getting hot here in Florida.
I'll stop there.
But, you know, and it's taking over industry by industry. And you should be aware of this, right? I mean, George Lucas came out, we said earlier, it says that he says AI is inevitable, and it's like saying, I don't believe these cars are going to work. Let's just stick with horses. And I know he came to this term when, if you do a YouTube search right now, there's people who've done Star Wars trailers that are unbelievable in AI, and they've done them in 10 minutes.
Now you're just taking footage from them and just rearranging it to make it exciting
it's not even taking footage from them. You're able to use these models and tell them, and they're called prompts, right? And you prompt them and say, okay, Star Wars, and it's going to take everything it knows from the computer that's just taking all this data off of there, right? and you're able to create shorts and you know, whatever you could make it. There's a lot of great scenes with every Star Wars where they have like, you know, a party going on in the background. They have like 50 different characters in almost every movie, you know, just a background to the story and everything. But you know, they was showing this and it was good. It was good. It was really good. And when you see these shorts and you're seeing, you know, movies being able to be made a lot quicker, you're not going to need actors anymore. So it's like having green screen, but you can do whatever you want. And a lot of these actors are nervous, and they should be, and writers, because now the writers in Hollywood are the greatest writers ever. I mean, think about their job, especially for a series. Think about your favorite series. Your favorite series is always a pilot. It comes out. They don't know. You think it's going to be great, but you don't know. It's a coin flip.
Yeah.
Whether it's Seinfeld or whether it's Ozark. And all of a sudden you're like, holy shit, this is great. All right, we got to do another season of Breaking Bad. All right, you know, Breaking Bad, for me, it was tough for me to get through the second season into the third. After that, it was insane because now you're like, wow, this is really going to, okay, we got to keep going. And you're making these, the writers are just incredible. But now a lot of this can be done for you. Now you don't need the creativity from these writers that, hey, we need these guys. These guys are great because now you have a system that could do this for you. Is it fair? No, but it saves a ton of costs and it levels the playing field, and it doesn't, you know, have one or two companies or you know, different directors or pick your industry where they own it and they have, you know, they're able to lock up everyone who's brilliant within, you know, who can write code and cloud and stuff like that. Now you don't need experts to do this. And it's changing the landscape of our business as well, which is where we're going, which we have a lot of AI. So this is fascinating to me. You should learn as much as you can about it. It's just like crypto, right? Throw yourself in the fire, ask lots of questions, go on Google, find people to search. We talk about this. We have a Curzio AI newsletter and you know, showing companies, small caps that are not AI companies, but are using AI to change the landscapes of their business, and productivity soaring where people are looking, oh, where's the AI component? They're using AI across all their divisions. That's why you're seeing so many companies, especially technology. They're laying off employees like crazy, which you've never seen happen ever when stocks are at all-time highs. Usually you're spending more. You want to grow more. They're not. They're
especially
their
stocks. To your point, markets are at all-time highs because of those stocks. Their stocks are at all-time highs, and they're firing people left and right.
But the thing is, they're firing people. So you think, okay, sales are coming down, and maybe earnings go higher. Sales are still going higher, right?
Yeah.
So you're seeing these productivity gains, which are incredible, and you need to pay attention because it is going to change the landscape of the world. Chances are your job is at risk. Your job could be at risk, okay? So try to prevent that. Try to learn everything you can about AI. But every business, their sole goal is to produce the most, produce whatever product at the cheapest cost, right? Make profit margins, increase the profit margins. So AI does that for almost every single company, and that means they're coming for your jobs. You should be prepared. It's not like I'm saying something you shouldn't know, but just be prepared. Because when I went to Consumer Electronics Show, Daniel, it's so funny because everybody was pitching. Everybody, you know, took executive tours for AI. Everyone was pitching this. I'm just looking at these people saying, you know, you're not going to have a job in a year, right? Like, you're pretty excited about something that's going to take your job, right? and I don't think people really get it, and they're starting to get it. I mean, George Lucas, right? I mean, they hated CGI, and so many people came out, and these movies are crazy and whatever. And I mean, George Lucas is the best of the best, saying AI is here. This is inevitable. You know, you better learn it, or you're done. And it's changing the landscape of Hollywood, and you're going to see big adjustments there. Now, I wanted to change to crypto because crypto, man. We went from, I mean, one of the biggest stories, I think, is how Donald Trump is now pro-crypto. He wasn't pro-crypto.
Right.
Okay, he was not pro-crypto. And now Biden has basically tried to eliminate this sector totally, right? I mean, with the SEC and you know, just constantly, it happened when he closed down banks illegally, you know, but all the nonsense that was taking place, and it started again in the past couple of months, right? You're bringing up these lawsuits, and all of a sudden we had a bill that passed through, bipartisan, passed very easily through the House, probably going to go through the Senate, where we're going to have a framework for regulation, which most people want. That's how you get trillions into the sector to protect your money. But that was just one story. Ethereum ETFs got approved already. I said they were going to get approved. I thought it would happen in October, like September, October. I didn't think it happened this quick.
I didn't think they were going to happen at all this year.
And rightly so, because you didn't think so. When you said you didn't think so, there was a 20% chance of approval, and a lot of people didn't think it was going to happen. So for me, I was like, listen, it's eventually happened. I think it should happen, you know, based on the filings and stuff like that, and the SEC comes back and says, this is what you need. I figured October, and how could you not approve the ETFs for Ethereum when you approve them for Bitcoin? It just didn't make sense, especially when you already said that Ethereum is not a security. Then did you see Sam Bankman-Fried, his top lieutenant?
I did, and I'm telling you, I didn't realize, well, he got 7, almost 8 years. The headline was best. Sam Bankman-Fried, top lieutenant, gets jail time or whatever. Frank made a comment earlier. I'm going to let you say it because it made me like fall over laughing. But I didn't realize that he had turned in such a way to really help their case. So take it away. This is one of the best bullet points there is here.
I mean, this is a guy that basically turned against his top guy, right? So he cooperated with the government. You cooperated with the government, and you still got 7.5 years in prison and fined $11 million when not one of the clients lost money. Maybe I shouldn't say not one of them, but 99% of them did not lose money. They actually made money off the deal, right? They made money off the deal. That guy's lawyer should be shot, okay, for that deal. He should be shot. Seriously. He should be. Shot in the foot. Relax, guys. Don't go crazy.
Oh, there
Sometimes
we go.
You're like,
all right, we can stay on air.
He should be shot, okay? You turn in state's evidence against the ultimate crypto crime boss of what he was painted to be, and I get it, and the guy did a lot of stupid shit, and yes, crypto went up, so no harm, no foul, and things did great. There's a company that invested heavily in Anthropic, which is, Claude is the best AI platform right now. Crypto is on fire, so, the company's doing great, and he's still got to go to jail for 7.5 years. He was supposed to get 18 months, and he got 7.5 years. And maybe something happened within that story I didn't read, but I just want to put this in perspective. Because if you look at Sam the Bull Gravano, confessed to murdering 19 people when he testified against John Gotti, and he only got 5 years in prison. This guy didn't lose a dime for 99% of your clients. You gave Sam Bankman-Fried up on a freaking platter. Here you go. Here's everything you need. Okay, thank you so much. 7.5 years, $11 million. Are you kidding me?
And they asked for 18 months, right?
Yeah, 18 months.
That's close. 18 months, 7 years.
Guys, I don't know what happened. Maybe he went against something he said. I have no idea. Maybe he did what is it? The Wolf of Wall Street thing when he's got the bug on him and he writes a little note to the guy.
Oh,
says,
yeah.
I'm bugged.
Yeah.
Right? Maybe he did what I have no idea. But I'm just saying
That's true. Good point.
If you roll over on someone, 7.5 years is a joke. Because you're talking about fraud within. This is. And let's be honest, right? Fraud when it comes to security industry is a freaking joke, right? You go to jail, it's fun. You get to watch TV, it's cool. I visited friends in jail. I'm not kidding. I grew up in Queens, New York, where some of them were in maximum security, and it's holy cow. One of them converted to Muslim because he said he's going to die if he doesn't. And another one, there was no fences around, and I'm eating at a picnic table with him, and he had 3 years, right, for federal. So when you're looking at federal, they just don't get punished like this, right? It's different. It's sad. They should get punished. Usually they don't. I'm sure Sam Bankman-Fried, that sentence is going to be lowered tremendously because, again, when you're looking at who got hurt, not too many people got hurt, but how do you get 7.5 years for rolling over? I just don't get it. Anyway, that was one of the stories. Odd. And also, Riot is trying to acquire bit farms, right? These are the mining companies, right? Bitcoin mining companies. And they're looking to acquire bit farms for $800 million, which is $2.30 a share. So the stock is trading right now. They already own a 9% stake. This is consolidation within the industry. Maybe it makes crypto a real industry, right? A lot has happened within this industry when it comes to mining and stuff. We get more details on that. But, and of course, Bitfarms, played tough and said, that's not enough. We want more. And this is a pretty good premium. But it's interesting to see this consolidation in this industry now. I think it's very, very healthy.
Yeah, I agree. And you've talked about this post the Bitcoin halving where rewards get cut in half. And you're going to see a lot more of this because how are you going to survive if you don't have easy, cheap access to power, which isn't easy? And I've just quick Google searches, Bitcoin needs to ride, and this has happened every halving. And the Van Tharp Institute, which he has passed away, used to do these great free reports and talk about, hey, the Bitcoin price or break even of Bitcoin miners is roughly around X, so look for Bitcoin to move back to that level at some point. Quick Google search shows that it's around 80,000 or, in different companies can, obviously mine for different prices, some cheaper than others. But I do think this is good to see this consolidation in the market. I think it'll be interesting going forward to watch because these guys play such a pivotal role in the Bitcoin ecosystem. They're not going away. And, things are going to be volatile and bounce around. But I just think consumers and individuals, unless you're really diving in a crypto expert, and you don't have to be to make money off this, just stick to, like I said, Frank has a great Curzio letter, crypto Curzio letter that you can follow for picks. But just stick with the big basics and Bitcoin and Ethereum. But the prices are going to bounce around. But these companies, there's going to be huge competition. They got deep pockets. They've all raised money, not all, but Marathon and a couple of big ones have raised money. You're seeing these guys. This is a hostile takeover. They bidded a little over 20% premium to the last month's prior closing. I don't blame Bitfarms for rejecting it. Of course, your stock's a couple bucks, so Frank, when your stock's basically a penny stock, you're always going to turn that down. Why would you accept that? I think this is overall very good and healthy for the industry. And I don't know if you have anything more to say about that, but did you see another company wanting to be the next MicroStrategy?
Yeah, the MicroStrategy, that's important to note. I want to get to that in a second, because I'm going to tell you something about Bitfarms. One, you say 230, you might think, well, it's kind of like, a penny stock. Like, it's all about the shares outstanding, right? It's an $800 million company.
Yeah,
that's a very big
almost
company.
$1 billion.
Okay, and I'm going to tell you, Bitfarms is absolutely insane for not taking this offer like immediately. You should take it yesterday, okay? Because no one else is coming, okay? Because this is the worst business to actually invest in, mining, when it comes to crypto mining. Because you can't scale the business, meaning that if I sell a certain amount of newsletters, right, I get to a certain point, and then everything else is going to be profits. Like oil, right? If oil, I'm profitable, everything over $50. So if it's $60, you're making a lot of money. When it goes to $70, it's not like your margins double; they like quadruple, right? So when you do the math, because it goes up tremendously more, because now you're scaling, because your costs are kind of, hey, it's $50 to produce. But when it comes to this industry, the Bitcoin halving. So what you do is, you're a computer programmer, you solve a problem. Everyone who solves a problem gets a bit of Bitcoin, right? Now, say if you, just for sake, you got one Bitcoin. Now with the halving, you're getting half for doing the same thing, right? You're getting rewarded for half of that, right? So your profit margin is getting cut 50%. Now, if you want to say, okay, I'm going to mine even more, you can't just go and mine more, right? Your computers are already on fire and go crazy, right? They're already like solving problems, figuring out, right? So say if you have 1,000 of these things, they're already amped up to the max. If you want to produce more Bitcoin, you have to buy more of these computers. What goes into these computers? NVIDIA chips, which are expensive. What do you need? You need a massive amount of electricity. Electricity prices are starting to skyrocket. That's why you don't see a lot of these go. They're very particular. I went to visit a mining facility in Washington. You want to have it in a cold area. It was snowing, because these things, the temperatures rise tremendously, and it saves costs. You see them in other countries, like Hive does this in other countries as well. I don't know if it's, wherever it is. If it's, Iceland and some areas, you want to have it in cold climates, but electricity prices are going up and up and up. Some states don't even allow this, right? So now if you want to produce more Bitcoin, you have to spend more money. Okay, so this is a business that is unscalable. So you got to hope Bitcoin goes higher, and Bitcoin's going higher. That's fine. Now, the big players are good, because now the big players are smart. They're like, okay, we have the best balance sheets. Let's consolidate this way we own the industry. That's a great move, and that's why you're seeing this. For Bitfarms at $800 million, just to put in perspective, Riot has $1.3 billion in cash and Bitcoin on its balance sheet. Okay, it's trading at a $3 billion valuation. That's what it's worth, the Bitcoin, right? And their assets, because you could probably sell like all your computer systems and stuff like that. And now they want to buy Bitfarms, right, for $230. It's trading at that. It's an $800 million valuation. These guys only have $120 million in cash and Bitcoin on their balance sheet, okay? Out of that $120 million, it's $66 million in cash. And you can say, okay, that's pretty good. The rest is in Bitcoin. Last quarter, in January, this is a company that had $88 million in cash. So just because of the halving, this company has spent they burned $22 million in cash in one quarter, okay? They have $66 million left, and yes, you could sell Bitcoin. This is a company that should accept this offer immediately. Sell the company, sell the valuation. Riot's doing a good job. You're going to see Marathon's another one. There's about 20 publicly traded Bitcoin miners. You're going to see consolidation. The big guys have to do this. This is how you grow. This is how you grow in this industry. It's not by producing more. It's acquisitions where you could consolidate the operations. You can cut costs, take over these facilities, have more computers and stuff like that, and faster processors. But after the halving, cutting profits in half, be careful with this industry. But man, if you're looking at Bitfarms, take that and run. Take it and run, because nobody else is going to come. I can't see Marathon coming, and these guys are not in a position to negotiate or to jockey. Because if anyone leaves them, the company will probably be out of business in 3 to 4 years, unless Bitcoin really goes to like 150,000, 200,000. Okay, because if it stays at this level, it has to go higher Bitcoin. If it doesn't go higher, if it stays the same, these guys are going to continue to lose money. right? And that's why you're seeing these companies like this burn through cash. Now, you also said something else about
Take the money and run, Frank. That's a good
who's the other
Steve
company
Miller
that just
line.
did what MicroStrategy is trying to do?
It's a healthcare company called Selmer Scientific. They develop, manufacture, and market innovative products and services that support early detection and treatment of chronic diseases. Yes, I'm reading that. Our flagship product, QuantaFlow, patented, FDA cleared, that's important in the healthcare industry, measures arterial blood flow in extremities and provides results in a matter of minutes. They have had earnings in the past. If you pull them up quickly on FinViz, it is SMLR is the ticker. The stock was trading over $50 most of 2024 and has absolutely tanked to under 25 until they said they are putting $40 million, including fees in Bitcoin on their balance sheet. Frank, this is a $200-ish million market cap. It's a small cap. Don't have earnings this year, according to FinViz, but again, they have had them in the past. And the press release that they put out said, our Bitcoin treasury strategy and purchase of Bitcoin underscores our belief that Bitcoin is a reliable store of value, compelling investment, is now a major asset class over $1 trillion market value. We believe its unique characteristics as scarce and finite asset can be reasonable inflation hedge and safe haven amid global instability. This is important not because the $40 million they put, not because of this company, no offense to them or the healthcare industry. Frank, what if, like MicroStrategy, who is definitely leading the calls and leading the charge, and this small company, but why not and what if a bunch of other companies start doing this? That is the real takeaway here. I only think it's a matter of time. I've been dead wrong again. What is this, beat up on Daniel today? I was wrong on the ETF approval. I was wrong because I thought GameStop, when
You're
they put
right
out the...
Chubb. You got 100% gains for Buffett side to buy. Okay, credit, come on.
When I put in, when GameStop, before their recent raise and craze from Roaring Kitty's post, they made a change to where they can make other investments on their balance sheet, give the CEO more, or the chairman, that gentleman, more power over investing assets. I thought that they would have already announced that they are adding Bitcoin to its balance sheet. They have not, so I still have egg on my face there. I do think, though, it's only a matter of time by these companies because, as Trump says to the African-American voter, what the hell do you have to lose, Frank?
You know, I don't know about this company particularly. You got to see companies do this to try to get a boost and it work for this company. But you are going to see now the accounting rules are changing starting in next year, right? January next year, where this isn't, Bitcoin doesn't account for an intangible assets. It's actual tangible assets. It's a big deal because you got to report losses on it. I think if you bought it for whatever, 300,000 and it goes higher and it's worth 20 million, you got to put 300,000. But yet if it goes lower than 300,000 to 200,000, you have to take that value. It's why MicroStrategy always reports losses, right? We all know, and you could just look and say, okay, it's bullshit accounting, whatever, for GAAP principles. But it's a big deal because it's a pain in the ass, and you have to, look to see where this is every quarter. It's just, extra steps for accounting, which again, and when you're looking at the big companies, it's all about earnings, and you don't want to see a company that's supposed to report $4 in earnings report, $1.75 in earnings because they have so much Bitcoin and they have to recognize as an intangible asset. With that being said, you're going to see more companies do this. I think it makes sense for them to put Bitcoin on their balance sheet. And it doesn't have to be to the scope where it's, more than 1%, 2%, 3% of the assets. But it just gives you an alternative to cash, gives you an alternative to gold, which, again, it's not the most liquid, right? But Bitcoin's very liquid and short term. So when I look at some of the biggest companies in the world that generate hundreds of billions of dollars in free cash flow, like Apple, like Nvidia is going to be there soon, and how much money they have in the balance sheets, which is 30 billion, 40 billion, 50 billion plus for a lot of the big technology companies, I could see them start to do this. And you're going to see more and more companies do this. I mean, it's especially with the regulation that's coming out. Okay, that's what we needed. I know Bitcoin diehards are like, oh, we don't want any regulation. You need regulation. You need to know your money's safe. It needs to have insurance on it. You need to have the FDIC. If money gets pulled out of your account or you get hacked or whatever, it needs to be covered, right? All these protections need to be in place by the Coinbases, by the Robinhoods, by the interactive brokers, a lot of these places that do offer cryptocurrencies, and you need that. And now that everything's moving in the right direction, I just think, Bitcoin, Ethereum, this is our theme for our Crypto Intelligence newsletter, guys. You can't really bring any more cryptos to the market in the U.S. because there's no rules and regulations, and automatically it's deemed as security and nobody wants to touch it, right? So you've seen that go offshore. However, the top 100 to 200, 250 cryptos, there is a lot of really great technologies. The software companies have good utility features. These are great names that are changing the landscape of finance that offer a massive upside potential. More upside potential than you'll see in almost any stock outside of NVIDIA over the last 10 years. I mean, so many names, you're not even cherry picking. You can pull them and you'll see 10,000% gains. It happens often. It's not, again, not cherry picking. You can look at, I would say 70% of the top 200 names have seen that move in a bull market where what's the type of market? What have you seen out of your junior mining stock that you own for 10 years during the worst market? And now you finally have a bull market and the cycle changed. What are your gains on that stock? Only 40% are at highs, even though gold's at an all-time high, right? So you waited hoping that you get, 2x, 3x, even 4x returns. Maybe you got 1x, maybe you got 2x, maybe you got 3x. You didn't get 10, 15, 20, 30x, which is what you get. And these are gains that we've seen in the past. So our portfolio is really positioned. I'm glad we got a lot of people in when we discounted that product. But, you should be investing in crypto. You should be investing in AI. But, like we mentioned earlier, it's not the easiest of markets right now because it looks like it's doing better than it is, and it really isn't because the underlying factors in the breadth's a little bad. Let's see how this plays out. It's an election year. More money's going to be spent. Oil looks pretty hot right now. Let's see what happens. A lot of consolidation, and Dana and I are going to cover a lot of that tomorrow. But just crypto's really been on fire.
And it works because the stock SMLR is up over 30% in the last 2 trading days.
And it's going to make sense for a lot of companies to do this because, listen, especially with biotech, because their business model is usually based on 1 or 2 drugs in their pipeline, and maybe, it costs a lot of money or whatever. Maybe they just want something else, like some other factor. I don't think you're going to see the MicroStrategy approach where MicroStrategy is a pure play Bitcoin company where they're highly leveraged. They're
Bitcoin development company.
Taking out debt to actually purchase more Bitcoin. But companies that have cash on their balance sheets, you're probably going to see more and more, especially next year. You're going to see this on fire. A lot of companies are going to announce this. And it makes sense if you can get a pop in your stock because it allows you to raise money and it makes sense. It's just like splits. Splits technically should not really drive your stock higher. The valuation doesn't change and people are like, wow, there's more retail investors. Retail investors don't really drive stocks. They could drive something like GameStop or AMC, which they don't drive Microsoft. They don't drive the big names, which are the names that you're seeing split, but stocks go higher. So why are they going to do it? That's why Netflix is probably going to announce a stock split, right? They're probably next. Anyone who was MVR Home Builder, anyone who has a stock price that's over, $500-$600 is probably going to announce a stock split because you're going to see your stock do very, very well. It gives you more opportunities when your stock's doing well. You could use that leverage to use for M&A, right? Use your stock as currency for M&A. You could raise money at a much higher price, which is great. So it's not as dilutive to your shareholders. There's just so much what you could do. And now that you're seeing this gain, you're probably from this crypto company or from this biotech company, you're probably going to see a lot more companies do that, right? You probably will. You probably see a lot more companies do it.
Yeah, like I said, I've been wrong on GameStop, but yeah, I definitely think it's a matter of if or when, not if. Excuse me.
Yeah. So other than that, I think that's it for us. I did want to give a shout out to, I'm always big on customer service because customer service is so horrible lately for so many companies. And you get on the phone and some of them are trying to use AI and even like a prescription. You can't even talk to someone at the pharmacy. They press this, press that. It takes you 20 minutes. I have a home that's about a year old and we had grass put in and we have someone that cuts the grass, but I never treated it. So now this is the first season where it's like, holy shit, you see weeds coming out of the grass. It looks bad. I'm like, wow, I got to get it treated. So the first thing that comes up is True Green.
You look like white trash with money, Frank.
I am white trash. Anyway, so.
That's a good song, Confederate Railroad.
So I'm like, all right, True Green, let's see. Right? So I fill out, listen to this. I got to say, this is cool. I fill out online my name, my phone number, and whatever, and I press enter. Then it puts me into like, I think, okay, what's wrong with the grass and whatever. 10 seconds after I press enter, my phone rings. They call me. They're like, hi, Mr. Curzio. I noticed that you're filling out a form, and I just want to know if I could help you out with anything.
A human called you?
Human. Call me. This lady called me. I'm like, I said to her, I was like, whoa. I was like, that was pretty quick. She's like, yeah, we got your name. She's like, okay, well, what's the matter with your lawn? I told her. She's like, okay, we offer 8 chemicals.
Looks like shit.
She goes, okay, so next thing, what are you going to think of? Price. She goes, okay, what's your I give you my address. And I said, you guys operate in Jacksonville because it's like, whatever. They operate in a bunch of states, right? All nationwide. So she asked me for my address. She goes, okay, I'm bringing up your house right now. Wow. Okay, I see your property. You have a nice screen enclosure. Okay, your property is this. She knew the perfect dimensions of my property, how much I needed for grass. This is in a 5-minute phone call.
Yeah, that's scary.
And she's like, okay, this is how much it's going to cost, blah, blah, blah. I said, oh, okay. They're like 11 treatments, and the price wasn't that bad. And I was just like, is that the best you could do? She's like, hold on. 2 minutes later, she's like, we can give you another 10% discount for that. And afterwards, you know what I said to her? I said, what's your name? Whatever name, Mary something. I said, Mary, you kicked ass on that call. She's like, thank you so much. I was like, whoa. They brought up my profit.
Did you leave a review?
No, I never. You know what? I'm bad at leaving reviews. I
Evidently.
leave a review. I know it's so terrible. It's just people. I just feel
Come
like.
on, Frank.
You know what? You know what pisses me off though? I feel like you're leaving a review for someone that just does their job. She went the extra mile.
I got you.
But people are
that's a
like,
good point.
oh, if you leave a good review, I'm like, isn't your job is to provide good service to me? That's why I'm paying. That's why I'm giving you a tip. And then, anyway, sometimes I don't always leave reviews, rare, but I should leave a review how she was great. I just wanted to leave off with that because customer service, there is hope.
Yeah.
AI is taking over, and AI works for some systems. Let's see what happens, but it's really nice. I want to give a shout out to True Green. That was pretty cool.
We need
Not
True
getting
Green.
paid.
We
by
need
them
True
at all.
Green to be a sponsor. I'll call him and ask him to sponsor.
It was really cool. It was a good call. Good for her. So anyway, guys, talked about a lot of stuff today. Covered the markets. Question, comments. We're here for you. Frank, CurzioResearch.com. Dan, what's your email?
Daniel at CurzioResearch.com.
Okay, and catch us tomorrow, Wall Street Unplugged Premium. Guys, it's not on iTunes. All right, so this is where Dan and I share our favorite stock ideas with you. Also give you access to our trading service, Dollar Stock Club. Daniel, how many stocks? We just sell last week. I mean, we went a little nuts, right?
Yeah, we just sold 13. We're getting a lot in the portfolio, a few older ones, but some big winners. So
yeah, the portfolio's been doing really, really well. So it's just, we see what's going on with the markets. Like, companies are reporting. We'll put like a stock in that portfolio every single week, no matter what. But we really get into details, more stock ideas and stuff like that. And to find out more, you could go to
tomorrow as well. Oh, sorry, go ahead.
No, just go to wsupremium.com and you can find out more information. But again, that's not online, guys. So that's a premium podcast. It's $10 a month, and you can cancel whenever you want. But you get ideas and you get access to one of our best services, and best performing services is doing great right now. So which is a lot of fun. So again,
I forget what I was going to say.
see that? It must have been really, really important.
We took some big profits. Yeah, I don't know.
I don't know.
Have a great day.
Did 13 stocks?
Oh, tomorrow we'll go over some earnings, some interesting stocks and earnings, and one that I've been negative on, but I think it's about time to start looking to catch the knife, just because a big hedge fund guy built a big position and put some people on the board of directors, which is always a good data point to pay attention to.
No, definitely. All right, guys. Thank you so much for listening, and we'll see you tomorrow. Take care. Love this episode of Wall Street Unplugged? I think you'll really love Wall Street Unplugged Premium. The Wall Street Unplugged Premium is my members-only podcast where I dive even deeper into this week's events. Well, I'll do even more than tell you what's moving these markets. I'll tell you specifically what moves you can make today. So this is going to be about trading. You can put big money in your pocket right away due to the inconsistencies I see daily in the market. I'm talking about specific investment ideas I'm recommending and tracking each week that I believe will be impacted directly by everything I just talked about today. Plus, you're going to get the chance to go even further down the rabbit hole with me and my co-host, who's Daniel Creech, as we discuss which of these week's trends could turn into massive windfalls. Could the big trends that we see lurking on the horizon, also the news we're picking up from our network of insiders, which has gotten bigger and bigger thanks to you and so many people listening to this podcast in over 100 countries. And you get a chance to talk to me directly in my special Ask Me Anything Q&A session. All of that and a lot more, like premium interviews with world leaders in finance, technology, industry, and politics. This is all part of Wall Street Unplugged Premium. And becoming a member is super simple and super cheap. So head on over to wsuoffer.com to check it all out. Sign up today and you won't miss a thing. That's wsuoffer.com.
Wall Street Unplugged is produced by Curzio Research, one of the most respected financial media companies in the industry. The information presented on Wall Street Unplugged is the opinion of its host and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility.